I shall make you host again. Where are we? All yours, mate.
Anyway,
we're off and running.
Okay, buddy. Thank you, Ryan. Hi, Ingmar and Mike and Scott and Steve, and who else is with us today? Hugo, how are you? RJP, Mike Green. Okay, your third or fourth one you don't remember. Okay, John Hawkins. John's a good trader. I've been watching him in the chat. Has some good ideas and keeps our feet to the fire. Hi, James. How are you? Everyone doing okay? I think it's Ryan and I. It is. It's Ryan and I. So the dynamic duo are good. We're gonna try. I'll be Robin, and Ryan's Ryan's Batman, and we should be able to come up with something this morning. I noticed we have big risk off again. We're near the lows. What I wanted to point out that's starting to shift a bit is, I talked about the top and the gold silver ratio. And this is pretty classic where you have gold down and silver up. And here's the gold silver ratio. Yeah, I may try and put in some type of ABC, but this is a top. So, you're could kiss, I think, 92 goodbye. And I'm looking for much lower numbers. So you'll start to see, if you want to buy the metals on weakness now, I think silver's a 1. I'm not sure that this is enough here, because here's where I want to buy silver. Back around this breakout, maybe a little under 32. And that's probably going to take a lot more gold weakness to drag it down there. So that's kind of my trade of the week, is to look to buy a break. I know we have some inflation numbers. Maybe that's what'll take silver down to those levels. Getting back to our wheelhouse, take a look at what's happening in yen. I think it's the 4th time I bought it. And even though we keep making marginal new lows, they've all been winning trades because of probe, take partials, and then protect. Okay, so I'm stubborn. I'm staying with this divergence here. We have yields down because of risk off. Actually, TLT is trying to put in a good day, but I think TLT has at least an A, B, C in it. So we'll see. And I'd be careful about pressing the short side down here in the S&Ps. So here we are. We're going to get some type of capitulation. I don't know. It's you have a lot of bearish company. Let's just put it that way. So we'll see. I've been looking for maybe a rally back to here again. And then here's the key area. If we do get a rally, we shouldn't get through it, because Elliotticians are saying this was wave 1 and this is 2, and we're trying to finish 1 of 3. Okay. So if we get a bounce and it's a failing rally, it's 3 of 3. And that's the payoff. That's kind of like the, big decline that could be, up to 1.618 of this. And now we're talking about 5, it's not like a small sell-off anymore. I mean, we haven't had 5% in quite some time, and we're there. NASDAQ's 10. So let's see if they could generate some kind of rally this week. Expirations a week after this. And let's get to some interaction with Ryan. So Ryan, you had that big week in Euro, kind of moving sideways. Where's your, on a pullback, where would be an area level that you're paying close attention to buy a pullback? Because I'm just guessing that's the way that you're looking at Euro now.
Yeah, I actually had a little short earlier this morning, just an intraday short against separate to my long, because we had some better data and it popped, but it's holding up. 108 is holding, so that's 108, 107.95. That's the first level. But 107.60, which is just below, just below
right here.
where you just had that crosshair.
Yeah, I have that black line there, so it must have meant something.
Yeah.
It's amazing. You leave your lines on your setups and you forget about it, and then they come into play months later. It still surprises me.
Yeah.
So, and look at what else is here now. We have the 200 day.
Yeah.
Okay,
So
so
that's just above the big 107 level, which is
yeah,
another old level. But we've
yeah,
got this 108, 30, 70 zone, which is one that has been on my chart for years. Like you say, levels you leave on your chart
yeah,
for years and years. And I think we've been messing about it. You know, the high today was 74. We poked above to 88 after the NFP, couldn't hold it. Came back into it. We held 108.30 for a while. Then we broke below it, couldn't hold it. Now we're back in it, in the zone. So this zone, you've got to treat almost like a pivot point. As soon as you see price action, either it's holding below 108.30 or it's building onto 108.70, that's when you can look to go with direction. But we
because
can
these are the next targets up here, 111 level, right? 11 and a half, 12.
112, 112.
Okay,
That's
okay,
those highs there. You
that's a
remember that
lot.
when you called those ones? I think when
Yeah,
we were at 109, you said we could go up there, and
yeah.
I said if we get up there, I would sell that blind, which I did on the first instance, and then we got the dip down to 110, and then back to 112, and it was very nice. So
Look
yeah,
at so we have a couple of moving averages on the daily. We had the 200 day, and
yeah,
on the weekly we have the 200 week right here. I didn't even notice it till here. So I mean, there's a lot of confluence at this area that I didn't know 10 minutes ago. Okay, I hadn't looked at all the moving averages and everything. So a real big level. Start
yeah,
closing above it. Yeah, that 112's the next target. So um, I think you have to find a way to get long. Um, Hope for some type of pullback, maybe towards 7.5. They're not going to give you the breakout at 105 again. I
no,
think that'd be there. If you, I think this is one of these breakouts where if you didn't buy it, they're not going to give you a chance. If they do, then we're going to parity.
yeah.
So
If we're down there again, something's changed, and you don't want to be buying it. You want to buy it
yeah,
now, but not when we get
yeah,
down there.
yeah. So that's the game plan for Euro cable. Anything different? It's above all the weekly moving averages. That's pretty strong. That's your weekly. Um,
Yeah, similar
yeah,
to the euro.
yeah. This was amazing. I'd be buying pullbacks in this. I don't know if we're going to go to new lows here either. I draw my fibs and maybe back down here.
Yeah,
83.40 to 83.20 might be worth a probe. Or is that what you're thinking?
I'm getting a bit of an itch to be short. Um,
Okay.
Up here, 84.20 is again another zone.
Yeah.
84.20. We've tested it, twice, three times over the short term. My only concern and lack of conviction is the fact that since we broke 83.60 and that's held as support, we've
Yeah.
just made higher lows. So
Yeah.
it's
It
if we
looks
get
like a
another
little.
test or another test or two at 84.20, it doesn't get through. That might be my trigger to have a little go up there.
Yeah. I don't know if we took this high out, but let's see. This is 17.
Yeah, not quite.
18. Yeah,
Yeah,
it'd be like a little three drive, Ryan, if that happened. See, one, two,
yeah,
three. And down here, same type of divergence action. If it made a new high, it's not going to confirm.
yeah,
So yeah, and then just see where it takes you.
yeah. Just gutted we didn't get those low 82s again. I was itching for a
Okay.
grab there, and it just took off. So
Okay.
can't close it.
Canada Looney's got a life of its own. Dollar's weaker, Canada's up again. I know it's tariff related, but brought it up last week that, dollar has been making consecutive lower lows, and Canada's starting to put in higher highs. Here's a higher high. Here's a higher high.
Yeah.
You know, I wouldn't be short. Maybe we have another run at this and not take out this high. Anyway,
I think
250% tariffs on dairy. Maybe
yeah,
that's what's behind it.
I think you've got to look at this one. You look at the first tariff action that we got beginning of February, big wild moves. And then we
Yeah,
had the deadline kick. Then we came to the deadline March, tariff moves, but not as big. The market, this is the market, it's had its first shock. Now it's like,
yeah,
okay, we know the story. Yeah, we can
yeah,
still be volatile. Now we've got another deadline kick. The
yeah,
market go back to trading the techs again properly.
yeah.
But
Uh,
Kman's here as well if you want to bring him in.
I saw a case here. So, Kay, we're lucky to have you for a couple more days before you take
Yeah,
off.
good morning, Dale. Good morning, everybody. Yeah, I
Hey,
was a bit struggling to get into the webinar of
room?
with your time change over there. You shouldn't
Oh,
allow it, Dale. Come on.
well, yeah, I know that happens every year.
Yeah.
That people get forget time changes and stuff, but I'm glad you're
Mhm.
here. I know your head's in vacation mode. We had your inflection point that you were calling for last week. Um, this dollar decline, I really don't see anything big till par. Um, what are you doing? Anything or any advice or
I
uh,
Well, you know what? You were talking about the Canada. It does look like Mexico has perhaps a little bit of a better role right now. So that dollar
yeah,
mix is keeping quite lower. So perhaps people are trading the cross makes Canada. So we also have Carney coming in. I guess the question is there now. Will he be able to have a stronger either a stronger relationship with the U.S. administration, or will he be the same kind of fight as Trudeau? And the market is a bit out.
yeah,
Yeah, we're waiting for the confirmation. We also have Bank of Canada later this week, but I would argue, as I said, we were talking about it earlier on the Flow Show as well, that it's a bit like the ECB. Yeah, we're expected to go 25, perhaps stay still for now because the tariff is question is
right,
not solved yet. But
right.
yeah, I don't think the Bank of Canada will be such a big thing compared to are they or not going to have to go pay up a lot and then do a lot of retaliation. That will have a bigger impact than the Bank of Canada this week. I um I still think the dollar has turned a corner. Globally speaking.
Yeah,
Uh,
it didn't turn the corner. It fell down a sewer.
yeah.
Someone left a manhole open.
Yeah, and I guess, Dale, that we are going to find rally sellers because when we look at the euro dollar, you always have to look at the two sides of the pair, right? Of any pair. That's why I always try to be selective in the pairs that I'm trading. Because but I think dollar wise, yeah, I think we're going to find rally sellers. If you get a I don't know how much if we can qualify it, but like a 1% or so, or 3/4% retracement, we're probably going to find rally sellers for now because the lack of confidence or the confidence has changed, and
Yeah,
I think that money managers are still in their rebalancing mode, and they're probably not done yet. Because sometimes you have headlines and things, but especially retail traders, we think there is a 1 day move and then that's it. But no, I mean, if when the big money managers change view and change their books, it can last for a while, and I think we are in the process of, you know.
yeah. It's like turning a battleship around because
Yeah.
we've had what at least 10 years of major outperformance by U.S.
Mm,
denominated
yeah.
dollar denominated equities, and
Yeah.
I saw a guy say that this shift is like it happens. Last time it happened was 20 years ago. So it's just at the initial stages.
Yeah.
So the dollar is kind of like the proxy
Yeah.
for the change, right?
And
So
we've been talking about this change, Dale. When you say the change, you see changes in correlations as well. It's not so much because people are so used to trade weaker dollar, higher stocks. But if
yeah,
the correlation changes, that's where it gets dangerous, and we need to pay really close attention because this correlation is changing. Since last week, we have seen a material change in correlations. So this is something that the people need to really pay attention to because, and that's why I said also last week. I mean, if you look at the yen, regardless whether there are tailwinds or headwinds in the yen, but the tailwinds are bigger than the headwinds, I think, right now. But if you look at the yen, it's left the yields boat and it's gone onto the equities and the
yeah,
rebalancing boat. And now when you see stocks come down, yen is actually strengthening again, which is
right.
the correlation that we were trading over the global financial crisis rather than and
Yeah.
the start of the pandemic, but not after. Afterwards, we've been trading something completely different. So this is now, and that's
But
all part of that shift. You know, when you see a shift in sentiment, a shift in portfolios, you see also a shift in correlations, and I think we are in the midst of it now.
okay. So yen is acting more like a safe haven currency again.
It's back. It's back as safe haven and Swiss
Yeah.
as well, and but there are tailwinds for the yen as well. The outlook for another round of quite big wage hikes. Japan, because Muto is I think meeting with Lutnick today. The outlook for Japan, but possibly escaping tariffs, still being a big U.S. ally. We are also entering the last month of the fiscal year. We could see a bit of. I wouldn't rule out a bit of money repatriation because the Japanese companies have performed extremely well. They had record profits in yen terms
Hmm.
over the course of this fiscal year. So there is a lot of tailwinds for the yen, and then you add on the risk picture.
Okay. And look at where the 10 years stop.
Yeah.
So I mean that if you're looking for lower yields, you got your the goalie made the
Mm,
save there.
mm.
So he's got to continue to make saves there. I'm not so sure it's over. I thought there might still be a chance to even get up here for a right shoulder.
There is.
If you're bearish, huh?
I think there is. But
Okay.
will it save the dollar is another question. The thing is, Dale, I've been saying so quite often that 420 and give and take 10, 15 BPs around is a bit my neutral zone. So I think we are in this neutral zone right now. It's been a traffic zone all the time since we went up and then back down. We've also always kind of came back to 420 and then what do we do here, you know? So I think, yeah, your lines are pretty cool there. Give and take 10 BPs around 420. That's going to 10, 15 maybe. That's going to be decisive for the next move. Huh?
Okay. So this was a 410, and this was 434. So you take if we get back above it, 24 is going to give you
55, 60.
60 right up here. So
55, 60.
maybe we get that.
Yeah, and that's where your line comes in. It all depends how the next leg of Trump plans maybe will be, like on spending and stuff. Yeah,
We have a PPI this week, don't we?
um,
We haven't. I think we do have a PCE. I mean,
do we? I'm
I think so.
CPI,
right.
CPI
CPI. Okay, when is that? Wednesday?
Wednesday, yeah, and the
Uh,
BOC as well.
okay, so Wednesday's kind of our wild one this week. Okay. So what about risk? What do you guys think? I mean, here we are. We're getting ready to crash into expiration. Are we?
Don't know about that.
Uh,
You never ruled it
yeah,
out, of course.
yeah. I mean, um, we've been diverging in price since February 25th, but this line here, this was what Blake gave the line. And then, like I was saying earlier, I saw a count where we could get like an ABC, but we don't get back above 59 because you're not correcting this whole wave. You're correcting what this wave practitioner is saying 3. This was all of 1. This was all of 2. And now this was 1 of 3, and then you get 2 of 3. And 3 of 3 or C of C is they're the money waves. So we'll see. I'm waiting for a pop. So, I may be waiting until I have a beard, but that's what I'm doing with risk. I'm not short here. Give me a 2-week rally, and there'll be plenty of things to sell. Because especially Mag 7. The thing that bothers me the most about this decline is what's happening to banks. Right? They just got massacred, and we were correcting for months before the banks joined in. Here's Bitcoin, all the way back down to support again. So this too is a theme of liquidity. And when you think about it, now with federal spending being cut here in the U.S. and the Fed being stubborn, liquidity is being drawn out of the system in America, where Germany, which wants to rearm, is now coming in with the fiscal stimulus, and that's a different. We're withdrawing liquidity, and the rest of the world, for different reasons, are adding. China being one of them, and now Europe. So for the first time, the U.S. is on the opposite side of funny money. Do you agree with that, Ryan? That's the problem is we're withdrawing liquidity through Doge federally. They're not, I don't know what they're going to pass fiscally that's going to be stimulative. Just keeping the tax cuts as is, you wouldn't think would be any more stimulative. It would just keep that going, so it's not, I think Besant said if they don't renew the tax breaks, it'll be catastrophic. He used that word.
Yeah.
So
in one sense, you've got to think, if they achieve what they want to, if Musk achieves what he wants to from Doge, reducing the government spending that goes on, stuff outside of the US, paying for, boating lessons in the Democratic Republic of Congo and, stuff like that, then that's money that can be spent in the US. That's money that you can spend on your infrastructure. So, does it withdraw liquidity? It reconditions it, if you like, repurposes it, which should help.
Okay.
But that S&P, if you stick what's your contract, Amanda? If you stick a line around 56, 70-ish and take it back, this is a big break point on the way up. Massive resistance. We got there in the cash market, 56.70, and then we dipped all the way back to 51.20 before breaking all the way to these highs. Goes back to May last year, probably around about where your second drive is there.
Okay, yeah, that's why the black line's there.
Yeah, there you go. So this is huge, this level.
And you have a weekly moving average right underneath it. So it got through the daily, all right? It punched through the daily, but look at this. It's right there. You're right. Because, really, this would open the door to, the 4,900 level I talked about before we even topped. Okay, people thought 4,900, that's like a crash, but that's what it targets if we break this level. Don't you think? Or at least 5,100, 5,400. I don't know. You could pick a bingo number, but I have confluence. Doesn't make sense that it never came back here to test the breakout. and you were long over 4,800, so you know how it acted. That was a great breakout.
Yeah.
It broke out and it never looked back, and we couldn't retest it. We couldn't retest it. Now it looks like we could retest it. And you know, the guys who have 7,500 targets, this is how you get 7,500. If this is a low, which is, I think, doesn't negate the bullish case, this could be a wave 4 still down here with 5 to come. And say we get to round numbers, 5,000, and we topped at 6,000. And next time over 6, you get 7, because it could tack on that 1,000. So, you know, this is really going to be what's going to happen is people will finally give up and puke down here, and then the Fed will get out its bazookas, and the economy won't improve. They're two different things, assets and the economy. They really are. They could be the opposite. So the Fed will come in because of economic weakness, should that happen. And probably I think they'd be a little bit concerned about 4,800, would want to make a stand. And that's when you get, you know, the dollar really accelerating to the downside, commodity prices really taking off, and a recovery just based upon nominal um, uh, growth because the dollar's weakening. It makes the market's a bit of a hedge even on a weak dollar if you're in the right stuff.
Yeah.
So that's kind of what I'm seeing.
Mr. Brown, Michael Brown and I do the UK trade-off. We don't think we're going to see 4,800 again.
What are you guys looking for?
Well,
right here, it holds here and goes.
It could hold here, but we don't think we're going to get a dip deep enough to 4,800 unless something's really crapping out in the States.
Okay.
So yeah,
I mean, has China retaliated?
Yeah, and they've done all little bits and pieces. You know, they've just retaliated against Canada. They've put tariffs on
saw
peas.
that. Yeah,
you know, peas. I didn't know Canada exported peas to China, but there you go.
yeah. Oh, yeah, peas.
Also, keep an eye on the Nasdaq because we are very close to that trend line support.
Okay.
Around 19.75.
All right.
That's a biggie coming from 2023.
All right, let me get the NAS up there.
Yeah, you've got it. Oh, Nasdaq. Well, it looks very similar to the S&P. 2023 there. That last little low there. Start of 2023 over the low of 2024, and we are right there. And it's also the 50% of the last leg higher from August into the all-time highs, and that support is coming in right very close to the market there. Yep.
Okay.
And you've got your weekly.
All right. So we have that, just something to keep an eye on for this week. Here's the weekly. You know, I've been waiting for this blue line for a while, around 62. So if I've waited this long, I may as well wait to see if it, really gets there. I'm going to be taking a shot with options, probably buy some calls. In fact, I'm going to ask Michael Kramer how he would play a long oil. I'm sure he's bearish. The whole world's bearish. Anyone know any oil bulls? I don't. So,
only the producers.
Huh?
Only the producers.
I'm right here. Oil can't even break $66 a barrel. Everyone's bearish on it, but it won't go lower. So.
Well, I was thinking 62. So let me welcome Michael. Let me say thank you to my teammates.
Cheers, Dale.
Really, thank you, Kay. I'll say goodbye to you tomorrow, and
yes,
Ryan,
sir.
good hunting, and everyone get in the room and work with these guys. $1 for 10 days to pick up some good ideas, and maybe I think people, Mike, and maybe you say this too, Michael, that sometimes our best trades are the ones we don't do.
That's right.
That because we, may have had second thoughts about something because someone's whose work we respect. I know it's happened to me many times. I keep an open mind. I think about it, and I could see their point, and I'll just pass on the trade. And it doesn't show up on your P&L if you miss being in a losing trade, but pretty important. So thank you, Kay. Thank you, Ryan.
Thanks, mate.
And see you guys
Hey, Dale.
tomorrow. And Michael Kramer on X,
Hi.
Michael Mott CM. How you doing, buddy? This is your kind of environment. You've been talking about this happening for
Yeah.
quite some time.
Yeah.
I'm going to stop sharing so that we could have a little conversation. See your setups here.
Right.
We're pressing the lows. What do you think? We accelerate, or will the PPT help the market here generate some kind of rally? What do you think, Mike?
Well, I think I mean this market has the potential to go to 4,400. I mean, forget about 4,800.
Okay.
That's how overvalued it is in my view. I'm
Okay.
happy to share some screens with you, but
Go ahead. It's not letting you?
I mean, again, I'm not making it. No, I can do it. I'm not making it from a I'm not trying to make that point of view from a technical perspective, but just from a fundamental standpoint, right? If you try to think
Yeah.
about where value investors, we kind of always think about levels. For
Right.
those of you that's been around for long enough, you kind of think about where's the levels where people who find value in the market might step in. And this is just a chart that shows the S&P 500 12-month forward PE versus the median, right? It should come back in a second, versus the median, the blue line's the median. And this is how far we're trading from the median, right? 7
Yeah.
points. So, I mean, we're
Yeah.
up here with, 2000, and we're
Yeah.
up here with 2021 and 2020. I mean, the median's down here at around, 15.2.
Yeah.
So, I mean, if you take, you know, I think the estimates are for like 265 this year times 15.2. You're talking about a 4,000 handle, 4,028 to be exact. So, I mean, from a fundamental standpoint, this market is beyond overvalued. And so, does that mean we go to 4,000? No. But what it means is that there's that potential, because that's where the value guys are going to say this market is, that's where a guy like me will say this market is ridiculously cheap now. It's too
Right.
cheap, right? But up at these levels, you're not going to get those type of buyers, right? And so you're left with all the momentum guys who are really chasing this market. And I think everyone's become so brainwashed that markets only go up, that, no
They're
one's
buying dips. They're
they're
buying dips
buying
all
dips,
the
but
all the way
but
down.
right. And unfortunately, I had a horrible experience of doing that in 2001.
Okay. Yeah.
Yeah,
Yeah. You have
didn't
to
work
get
out
hit
for
in it.
me.
Right. So yeah,
Yeah,
yeah.
and I'm
People
not
forget. People forget how a
right.
bear trades because they haven't seen one in such a long time.
And for some of those people, they may have never seen one. A
Good
true,
point.
a true, a true, market correction where the market is so overvalued that you're not going to get that, you may not get that value type of guy to step in and really support it. And that's really the question, right? And we just don't know at this point. It's too premature to say that. But I think that what you're seeing in this market it actually has a lot more to do with deleveraging right now than anything
Okay.
else. And
Right.
really, it comes down to a basic trade, which I'm sure you're familiar with, which is the Japanese yen.
Yeah.
And really, more importantly, I wrote something over the weekend, and I talked about the spreads between, U.S. tens and German tens, which have
Oh
just
yeah.
absolutely collapsed,
Right.
right? And if you do
Yeah.
this another way, 10-year minus, oops.
Yeah. So I mean, they're leading the way in rates. That's
Right. So now
unusual.
German rates have really, exploded over US rates. And with US
Right.
rates coming down, that's causing, the euro to
Yeah.
strengthen materially,
Yes. And
right? So you
I'm
have
looking
like
for
this,
what would happen. Let me ask you this: Europe having up until recently with this big fiscal spend that they're going to make, because they're concerned about Russia and they know that they
Yeah.
have to count on themselves. Is a strong euro for countries like Germany going to be a problem because they're mainly an export market? But because we've had this, I think it's a generational shift or a reversion to the mean where money's flowing out of here and
Right.
going anywhere else. It's being treated well in China.
Right.
The DAX has blown away the performance, and this is happens every 10 or 20 years. It's not an everyday event.
Well, right, and that's the thing. I think like what we're seeing is a shift. U.S. policy and the major shift that U.S. policy is implementing, which seems to be that of less presence on the global stage, or at least less of a less Europe is going to have to rely less on the US. That potentially means that, Europe's going to have to spend more. Now, the question becomes is, does the increased spending create enough growth to have them avoid, bigger problems from the stronger euro and higher rates? If it creates growth and the economy booms, then higher rates and a stronger euro won't necessarily matter, especially if that spending is remaining within the continent, right?
Okay.
If and so what we're seeing right now, in my opinion, is a repatriation of flows that were coming into the US that are now leaving. And another trade, so you have the euro trade going unwind right now going on. And of course, we have our friends in Japan
Yeah.
who, you're seeing right now, Japanese 10-year rates
Yeah.
are, I mean, have gone parabolic at this point. And so you're seeing those spreads really blow out. And you're seeing specifically the US 10 minus a Japanese 10 really breaking what I would consider to be some key support. Now, the reason why we didn't melt over the summer was because the BOJ basically kind of slowed it down. And right
Gave
now,
people a chance to unwind the carry.
right, we got to a point where we were starting to see that unwind. And then they came in and the BOJ kind of tapped on the brakes and said they weren't going to, raise rates when the market was volatile, when the yen was volatile. And, right now you're seeing the spread between US 10 and Japanese 10 also breaking down. But the problem with this spread is that it's breaking down and it looks exactly the same as the Japanese yen.
Yeah.
And so if you're going to be, and then of course, if you take the NASDAQ futures and you
That'll
just
look the
overlay
same.
them, I mean, it's basically this. So why is the market coming down? Is it really coming down because of growth fears? Maybe. It's not helping the situation because 10-year rates keep going down here in the US,
It's
but
more de-risking.
it's deleveraging, right?
Yeah, de-leveraging,
And
de-risking.
so,
Yeah.
I when I look at that, I say this could have a long way to go, right? We're only in early innings of this because, you know, you're
Yeah, I know guys
where
looking for 120 yen.
right. And actually, I mean, the
120.
truth is if the Fed comes in and starts doing what you're saying and gives the bazookas and they start, and rates go down even further, that could just, even add to the fuel at this point.
Yeah,
My
that would
viewpoint,
accelerate the dollar decline.
right, right. Because the
Okay,
rest of the world isn't going to be doing that.
right.
The other thing that, was very clear to me that really that seems to be the major point, right? So I mean, we can look at technical charts and the technical charts are going to tell us where the levels are, but they're not really telling us the real story of what's going on. And what I use a lot are these EAST1. This is basically the cost of financing equity, right? So, if you want to go out and you want to leverage yourself and you want to, do that, you can do it through these BTIC on adjusted interest rate S&P 500 total return futures. This basically measures the cost of equity. So this is new in TradingView. I asked TradingView to add this symbol specifically, and if you have a real-time ticker, you can watch these things trade all day long. The S&P 500 basically trades with these contracts, right? So when cost of equity goes up, you have a lot of demand for leverage, right? When the cost of
Okay.
equity goes down, your demand for leverage evaporates. if you notice, when we got into that frenzy into the end of the year, the cost of equity soared.
Right.
And that was kind of like a major warning sign at that point that this market was getting so overheated, it was at risk of basically exploding. And what happened when the year turned after that, Fed rate cut, that Fed December meeting, the date that this peaked was on December 17th, and then it literally did an intraday reversal. Here's the 17th,
Okay.
here's the 6th, 17th, here's the 18th, and then we went straight down from there. And so
Okay.
basically everyone that was levering up was like, no, we're done, because they realized that the Fed wasn't going to be cutting rates as aggressively. And so basically all the
Go ahead,
leverage,
Mike.
the demand for leverage essentially evaporated. And now on top of it, you have all this stuff going on, with basically euros and yen leaving the US. I mean, every time I think the euro goes up, every time I see the yen strengthen, I think about, the reason why that's happening is because people are selling US denominated assets and taking that money home.
What a big change. I mean, up until I don't know, January, actually, American exceptionalism. It bothered me every time I heard it. American exceptionalism.
Right.
Well, everything's doing okay except America now. So it's changed from exceptionalism to except we have a problem here in Houston.
Well,
So
when you look at the American economy, though, it's not really like in shambles, right?
no, it isn't.
It's doing quite fine. I mean, the February payroll report certainly didn't suggest that the world was coming to an end. I think a lot of it is overreaction. And I think a lot of it is just the world waking up and changing its tune, because it realizes that with the Trump administration, the US is going to be less involved on the world stage potentially, or that, the US is going to be charging more for tariffs, making it less favorable for the foreign investor here in the US. And the world is just adjusting accordingly. I mean, it's
So
quite
then let me
possible.
ask you this, Mike. You're talking about this, and um, do you feel are you still a bond bear based upon what you just told me?
Well,
Are
that's
you
the thing I've
neutral
been
now?
thinking. Now, that's the thing I've been thinking about the last couple of days, because
Yeah,
it's very clear if you listen to Lutnick and Besson, both Wall Street guys, right? Lutnick is from Cantor Fitzgerald, the president of
I
Cantor
remember.
Fitzgerald.
Yeah,
His brother was the one that passed away on 9/11.
nine. Right,
And so Lutnick is was the head of Cantor just until recently, and you have Besson, who was a macro guy. He worked with Soros and what's his other Druckenmiller, and they're telling you they want the 10-year rate to go down.
right.
So the thing I'm thinking about is, am I really going to fight that?
Yeah, okay.
If they're telling you they want the 10-year rate to go down, then they're going to put the policies in to make the 10-year rate go down, I think.
So we need the recession. We need we need a growth scare to continue.
Right, and really, and it may be somewhat intentional, because
Yeah,
again, they want, not only would a recession or a growth scare, bring the 10-year down, it will just totally get rid of inflation, and it will force the Fed to cut rates. So, I
okay.
mean, if that's their intention and they're telling you basically over the weekend, they realize that things may get bumpy here, or that, we may see
It,
some pricing. The government, Trump is basically telling you he knows what the risks are and he doesn't care.
yeah, his buddies are short and looking to buy cheap. So
Maybe. I mean,
maybe,
I'm
yeah,
certainly scrambling to put together lists of things that I want to buy, because, we know this market moves quickly and we could move very quickly to the downside. And you got to be ready, because you just don't go all in at one price. You got to kind of scale your way in. So would I be a buyer of the market as it comes down? Yeah, at levels I probably would be a buyer of the market. I have a list of stocks I've been following for years, waiting for opportunities to get back in them, and I may get those opportunities on this, because I
yeah.
think at
So
the end of the day the U.S. economy comes back out on top. I don't think we're going into a depression, I mean, so, maybe it means that, we've seen some sort of top in the market for the next year or two while the market sort of digests all these changes, valuations normalize. It's possible.
everything and anything. Where are you at on oil, Mike? Is that
So, I
good?
mean,
I
I
mean,
watch oil. I've been watching oil religiously for a really long time. And,
Yeah.
Not because I want to own oil, but because of the importance it has on inflation. And this level here, going all the way back to 2019 at 66, is the level that matters most. And, you could even make an argument it goes back to 2018. And, this is the level that matters. And who's ever sitting at this price seems to control the direction of oil. I don't know who it is, but it's almost like a delineation. You go below 66, it's going to be very hard to get back above it. If you stay above it, it's going to be very hard to go below it. So I'm not, in my view, until oil breaks that magical level, you have to just wait and watch. My guess would be that oil is already really oversold. When you look at it on a Bollinger Band, we traded below the lower Bollinger Band, and I think intraday we got below 30 one of the days. So, I mean, we're pretty close to being oversold on two different indicators, and we can't break 60. So my guess would be is that we're going to probably see oil rebound and go higher, because the one thing we know is that Europe's going to be spending more. China's trying to dig its way out of a hole. And so it's possible that even if the US puts more supply on the table, that global demand picks up at some point. I mean, at least that's what the chart is telling you. Until it breaks, I mean, it's hard to be bearish on it. If it
Yeah.
breaks and it breaks meaningfully, and you're talking about oil at, much lower levels, you're talking about it getting into the low 60s, maybe taking out these low points,
That's what I'm looking for, it to get to
then
the low
then then then
60s.
it's a different story. But until you really see a break below 66 and maybe even a break below 63, I think it's hard to be bearish on oil.
Yeah, well, they're 63, 62. They're in the same ballpark. I think they're
Yeah,
just going to flush people. How I would trade it, if you don't like to hear the ice crack, because I'll be just buying it down there. You wait
right,
for a breakdown, Mike, under these levels. And if you're bullish, you wait for it to get back above the breakdown so
right.
that you cleaned out all the longs. So
Yeah, I
now
mean,
no
I
one
would think if it got it back above 70, it probably. I think the U.S.
100.
Didn't they make an announcement last week that the U.S. was gonna the energy secretary put in a request for $20 billion to start refilling the reserve?
I don't know, but that would be a factor. Good levels to do it at. That was
Yeah, I think I saw something
Biden's
on.
best trade.
Yeah, I think I saw something on Friday
Yeah. So
that
they'll
said
cover
that.
their short from over 100. That was a good
Yeah,
one of the best trades by a government official
yeah. Well,
in a
some of
long.
these government officials are good traders.
I've seen their net worth, and in fact I've had a discussion that these guys make money in the market and they don't even chart. They
Yeah,
just go to meetings
yeah.
and
I
talk to
mean, Nancy
people.
Pelosi is probably one of the greatest traders of all time.
Yeah, well, she replaced Hillary Clinton. This was in
Oh
the
yeah,
story from when we were younger, right,
I
Mike?
forgot about that.
She made
Yeah,
100 grand in live cattle, and
yeah.
they came and they asked her, "So Hillary, how were you able to do that?" And she said, "I read an article in the Wall Street Journal." Huh?
Wasn't she
But
also? Didn't she also invest in some? What was it? Whitewater or something? Was that what it was
yeah,
called?
yeah. Anyway, that broker got busted for delegating trades,
Yeah.
winners to his friends, and influential people, and the other guys stopped out. Anyway, so we've covered crude. Any interest in the metals, Mike? The
Um,
miners, things like commodities, anything commodity
I mean,
wise with the weaker dollar? Yeah,
copper
copper
looks
look.
kind of interesting, but
Yeah,
I'm not really sure on it yet because it doesn't seem like it wants to get through 485 or so.
yeah,
I mean, if it gets through 485, it's going to run to 5.25. I think to go back to these highs. But until
yeah,
you do that, I mean, you're just you really risk coming all the way back down again and giving it back. I mean, that's the other thing too, right? If we're going into some sort of recession, why isn't oil breaking support? Why isn't
yeah.
copper really coming down? Those are the things you really should see, which tells you that there's something else going on in the market. It's more than just really global recession fears. It looks like a deleveraging to me.
Okay. And we're only one part of the globe. I mean, there's copper demand everywhere, right?
Right,
So
right.
we could end up having a relatively weaker economy than the people that are stimulating.
Yeah, I mean, the
We're
other thing
actually,
that really
We're
interesting is
withdrawing that.
lumber.
We're withdrawing that liquidity from our
Yeah, we
system,
are.
right?
Yeah,
And most of the other world's going the other way now.
right. The other interesting one is lumber.
Okay, that's a
You see like the
Canadian
cup and
thing.
handle type of thing.
Yeah,
And
that is.
what's interesting about lumber is if you notice, interest rates have been coming down, but the housing sector has not. The HGX, which is the Philly housing sector, I use the CFD.
That looks
They have,
bad.
yeah, well, I mean, this gives you real time pricing during the day, but um, you can see this what level this is, and notice even though rates have been coming down, housing has really been deteriorating the sector. And this has things in it more than just housing. It has some of the material pieces that go in it as well. And that's obviously because lumber is going up, and that's
Yeah,
probably bad for margins, right? But I mean, if you break this region in here, let's call it 640 to 660. I mean, why
yeah,
couldn't you go all the way back to 460, 470?
yeah.
There's no
You could.
support in this region. Very
You're
little,
right.
I would say, maybe here at 575. But I mean, at that point, you're talking about, another 12% down and potentially returning to the October lows. I mean, that would be, so this is why I say, like, there's the potential for much further to go on the S&P when you start looking at things like this.
Housing. Yeah, they've
Yeah.
been under pressure for a long time, the builders
And
as well.
the reason why I watch this a lot is because it tends to be a good leading indicator of the S&P. I mean, it certainly called it out in 2018. Remember that?
Yeah.
We had that mini crash at the end of 2018. I mean, housing was horrible that whole time, just going down, going down, going down. And then the S&P finally caught up with it. But if you look at it even more from modern times, here, look at what happens. I mean, housing just rips to the upside, and the
Yeah.
S&P slowly caught up. And now housing's been crashing again, and now you can see the S&P is just catching up to it. So sometimes it's a good leading indicator too.
I tell you what, Mike, every time you come in here, I see charts that things I've never looked at before that either reinforce a narrative I had before I saw you
Right.
or change it.
Right.
So really some great inputs into what we should be looking for.
Yeah.
Don't worry about a depression. It could just be that's probably later. I was thinking we could go to 4,800, then the bazookas come in, and
Yeah.
then the guys that are talking 7,000, they'll
Yeah.
be giving up on their 7,000 call down there. All
Well,
right.
like they're already hedging. Uh,
Yeah.
Today I read
Yeah.
on Market Watch, Ed Yardeni, who has a 7,000
Oh,
target,
yeah.
is now saying we could have a flash crash.
Okay. So
Just got to
we
hedge
need.
yourself a little bit.
I have to wait for Tom Lee to get bearish, and then I'll do something
Yeah,
on the
well,
long side.
that
But
probably
you know
won't
what?
happen.
I don't fade you, Michael. You fade Mike Kramer at your own peril, because the guy.
The problem
It,
for me, the reason I've been so wrong on the S&P over the last, year and a half or whatever it is, 2 years now, is because I look at everything else and it just doesn't add up to what we're seeing in the stock market. And so it really makes it hard for me to get on board with stuff like that.
yeah, but then all at once, nothing happens, and then it happens all at once. That
Yeah,
last
unfortunately.
snowflake, that last snowflake to start the avalanche.
Right.
So Michael has a great YouTube channel for you to be able to follow him. You have a service now too, right, Mike? You're
On
providing.
YouTube, I have a member area now too. Yeah. I
Okay,
just tried to make it easier, and I have a Substack as well.
okay.
They're both called the Market Chronicles.
A great guy to keep an eye on his work. You probably just saw the tip of the iceberg today when he comes in here. Oh, okay. Mike Green's with you. Um, okay. Yeah, second half. I think this is second half recovery is kind of what I'm thinking. I don't think we bottom until earliest mid-May and possibly out to June, July. And
Well,
then
look,
we
I mean, the thing is,
freeze it.
I guess, right, is that if we're in some sort of phase where the market is revolting and we're seeing dollars repatriate because of policy that Trump's being put in,
Yeah,
and he doesn't, and he says he basically doesn't care,
right.
then how can
He
you
doesn't.
possibly know where that's going to be?
I mean, if you think that we had supply chain issues during COVID, all with these tariffs, I've heard they have to change all the shipping routes.
Right.
They're going to have less of them, less ports that they're going to be using. We're going to end up with shortages.
That sounds like stagflation.
Yeah, it does, doesn't it? All right. So, Mike, uh, great to hear from you, and real interesting charts on housing, and
Yeah.
that we're, we could relax. It's just a deleveraging, and your targets using fundamental analysis, which we don't get enough of
Right.
in here. It's all charts,
Yeah.
So thank you, buddy.
No problem. Great to be here.
All right, my trading warrior brother, Mike Kramer. Follow him on X at Michael Mott CM. Go to his YouTube channel. How many videos you making a week?
Well, every day for YouTube members.
Okay.
They're usually about 10 to 15 minutes long.
Okay.
And for free, I do like maybe I'm trying to target like 3 free videos a week.
Okay. All right. So people think we have good chemistry together. So we'll have to do a YouTube together, either
Sure.
on one of my, and really appreciate. Hope you have a great year, Mike. You know what I say to people?
What?
Let's have a good decade this year.
Yeah. Sometimes careers are made in less than a year, right?
Yeah.
So.
Yeah. All right, Mike Kramer, everyone, my
See you
trading
later.
warrior brother. Thank you, Mike.
See you soon.
Remember, everyone, don't just count your pips, count your blessings, and you could join the team in 18 minutes on the Morning Edge. See you tomorrow for Turnaround Tuesday. I have interviews every week. So Blake is kicking back in Mexico right now. Everyone deserves a break. And I think Greg is going to be with us tomorrow. So, lastly, you like my haircut? Can you tell I had a haircut? Someone said I looked like Dale from 1979. All right. Take it easy, guys. All right. See you tomorrow.